Okay, today we analyze three companies from the Philippines. So first, we analyze San Miguel Corporation. San Miguel Corporation is a diversified company. It operates in food, beverage, packaging, power, fuel, and oil infrastructure, and it also has a telecommunications business. The company produces, of course, beverages. They're known for that for many, many years. Poultry, animal feed, meat, flour, dairy products, and glass and plastic packaging. They generate electricity through San Miguel Power, refines and market petroleum products, build infrastructure, of course, tollways is theirs, and provides telecommunication services, the Liberty Telecom. Right. So as of the end of day today, their 1 year return, they are down 42.6% last year. Current PE ratio is at 14.8. So, and let's look at the financials of San Miguel. So annual increasing revenue, no problem there. Profit margin though, only 2.25%. So balance sheet, oh, that's a bit of a problem here. Debt to assets, end of 2018 is 56.29%, and also and quarterly, yes, 55.42% as of September 2019. So that for me is a negative thing. Then let's proceed with analysis. Current PE ratio is 14.77, which is about 19% above the current PE ratio of the P comp. So a bit expensive. On the other hand, its price to book is at 0.72 today. So that means the San Miguel Corporation is trading at 72% its price to book, its book value, right? So based on value alone, San Miguel Corporation, I would classify it as cautious buy. San Miguel Corporation for me is a good company, although my red flags are two. While the revenue is increasing, the profit margin is so small. I mean, in order to generate a clear enough profit, it has to generate tremendous sales, right? A huge amount of sales, right? And also, my big red flag, of course, is the debt to asset ratio, which is above 50%, which I really don't like. So for me, it would be just let's say class B. Uh, Maybe I will buy it if I don't find any other good companies out there. So yeah. So let's look at another company that's active today, the Metro Pacific Investment. So MPI is a company that is held by, of course, Manny Pangilinan, holding company. MPI, MPIC, as it is now fondly called by its employees, is an investment holding company. The company, through its subsidiaries, provides water, of course, Manila is there, sanitation and sewerage services, and also operates in real estate, infrastructure projects, toll roads, same as San Miguel, electricity distribution, hospital operations, so they have that, and light rail. All right, so MPIC is also uh, pretty diversified. Also own the NLEX, the tollway. So more or less similar to San Miguel in the sense that it's a diversified company. 1 year return, okay, 37.94% down. P ratio, I think it's losing money. So profit margin is, let's see if we believe that, right? Let's look at the annual rate. So increasing revenue, no problem there. Profit margin 32%, again, no problem. Debt to assets, okay, 41%, can live with that. Still below 50%, right? So key stats, earnings per share in trailing 12 months is negative. So that's a problem with the PE ratio. So in the last 12 months, it's losing money, right? So that's the reason why It's uh, priced low by the market. Price to book though is 0.45, so it's trading at only 45% of its book value. And what what we don't really see in companies like this one is, of course, the turnaround. Although the trailing 12 months is negative, but it's only negative by 0.09. So we are sure, if we believe in what Metro Pacific is doing, we know that eventually, we know its financials very strong. It has diversified revenue sources, so we know that eventually it will move up, right? And plus, it has a good profit margin. So we have a red flag there because the EPS is negative for the trailing 12 months. But then if it is a red flag, it's a very small red flag, considering also that it's trading at only half of its book value, 0.45. So for me, it's a good company to look into. Look at that, only trading at 2.70. It used to trade at about 5. MPIC used to trade beyond 6. So you see the deterioration of the price of MPIC for the past many years. The 52-week range, the highest is 5.28. So I would think that Metro Pacific is a strong buy, especially since I believe that eventually it will turn around. Right? So it's a long-term buy, it's an investment buy for me, and I would bet my money in Metro Pacific. All right. One last, let's look at Alliance Global. Very active today. Alliance Global is a holding company with interest in food and beverage. So it operates. This is the company of Andrew Tan, by the way. So it operates the McDonald's Philippines, which I loved. AGI, so we call AGI. So a holding company with interest in food and beverage, of course, that's McDonald's. Real estate, development, Mega World, fast food restaurant business. So the company distills brandy, manufactures glass containers, distributes wines and snacks, develops planned mixed-use communities, and either operates or sub-franchises hamburger restaurants. So we know what that is, right? So CEO Kevin Andrew Tan. All right. So what can we say about AGI? AGI's 1-year return is 52.6%. Wow. So 1 year ago, compare the price today to 1 year ago, it's just 52% of its value. So 1 year ago, right? So it used to trade in the 52-week range. It used to trade at 16.20. Now it's only at 7.10. Although the lowest that it has gone is about 5.30, about a month ago. So let's look at the financials. I believe that AGI is also a strong company. Okay, so annual revenue, maybe not as impressive in the sense that it's not growing that high, as high as we want it to be. Profit margin is only at 10%. Okay, but the debt to asset is clear. I mean, it's less than 35%, so it's only 33%. Key stats, of course, it's reading at 4.37 trailing 12 months, 35% only of the PSEI. Um, PS PEG ratio is only at 0.34. Of course, we want to compute that on our own, right? Price to book is at 0.38. Price to sales is at 0.42. So for me, this is another one of those screaming buy. Is there a red flag with the AGI? Maybe the red flag is that the revenue is not as increasing as we want it to be. The company is posting revenue, right? The company is posting revenue, although the revenue is not increasing as we want it to be. Okay, so if we look at the revenue annual, right? So from less than 150 to over about 150, 151 billion now. Net income is at 15 billion. So for me, it's this can be because it's a holding corporation. It's a huge company at 150 billion. What do you expect, right? it's amazing already that it's registering that huge of a amount for revenue in 2018. In 2019, at least at up to September 12, uh, quarterly about 43 billion. So I multiply that by 4, it will register about 160 or less than 160 for that matter. So I think, it may not be as impressive as a company that really increases by leaps and bounds. But yes, the profit margin is a bit smaller. But for me, considering the key stats today, very low PE, very low PEG, very low price to book only at 0.38, and very low price to sales because the sales is huge and it's only trading at 42% of that. I would say that Alliance Global is a buy. Okay, so that's it. But these are all value-based approach, right? So if we want to look at the technicals of these companies, then we will go to another